Hey, rich friends, it's your girl Cha Cha reporting live from the Cosmic Club, and we are back with another episode of The Money Mantra, where I help you to shape and shift your mindset about money. The purpose of this channel really is to educate people on the foreign exchange market and to help you all become independent and profitable traders, right? So, welcome back, right? And welcome to all of my new and returning viewers. I love the fact that you guys are here. I love the fact that you guys are learning. And I really, 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 really want you to share this with somebody else so that they can learn as well. So make sure you are subscribed. Make sure you hit the notification bell so that you never miss when I post another video. So just a reminder, guys, you do have the option to check out the playlist that I have that are a little bit more structured. I would recommend starting with my in-depth intro to Forex trading video and then just working your way up from there so that you do have a better understanding of the market. So, yeah, my name is Cha Cha, and without further ado, we are going to get right into it. Today is going to be a strategy video. I'm going to be going over a few of my favorite indicators that are nice and simple for anyone to understand, especially if you've just started trading, or if you've just started trading, or if you're just looking for a simpler strategy than what you've been doing. Because for people who have been trading for some time, you know that you can learn so many different indicators and so many different strategies and so many different things to the point where it actually becomes overwhelming and you lose sight of what you're supposed to be doing, which is making money, right? This is not supposed to be something that's so hard because the act of trading is actually very simple, right? You look at some colorful lines, some colorful bars, right? You press some buttons and you make some money. But if you don't understand what those lines and bars are telling you, then you are going to be out of luck and you will end up losing more money than you make when it comes to trading. And that is not what we want to do. So we're going to jump right into this video. If this is your first time watching this video, I tend to do a quick little overview in every video just so that no matter where you start, you do have a good understanding about what we're going to be talking about. So let's get started, right? So first and foremost, guys, the website that I'm going to be using today is called tradingview.com, which you can easily access by going to tradingview.com. And I love this website because it's very user friendly. I think it is one of the best websites to use when you are getting into any type of trading or investing because it gives you the option to look at so many things. But we're just going to be focusing on currencies today because the Forex market is short for foreign exchange, and that is the market that deals with foreign currency. So for my people that are taking notes, right? This is your first time watching the video, you're going to want to write that down, right? Forex is short for foreign exchange, right? And it's the largest market in the world that deals with foreign currencies. You can also write down tradingview.com or save it in your phone because you are going to be visiting this website a lot when it comes to doing your technical analysis, right? So I'm just going to teach as I go. And technical analysis is your understanding of the charts. What are you looking at? What are your indicators or digital indicators telling you about the price, right? So as you guys can see, I already have my favorite pair selected over here, which you can easily do, right? By clicking this little plus and adding what you want to add. But I've already done that, but that's just a little tip for you guys. So today we're going to be focusing on Euro USD. That's the currency pair that we're going to be using for this example. You're going to want to select your pair, and then you're going to click see on a more advanced chart, and that'll actually bring you here. Now, when you first log into tradingview.com, you may see a naked chart. You may not see these little purple crosses, which are called the parabolic SAR. You may not see these lines, you may not see these bars. Your chart may be completely empty, and that's because you haven't put these things on your chart yet. So we're just going to back it up a little bit, and I'm going to hide these for a second just to give you guys an understanding of what we are looking at. I'm going to hide the volume bars and we're going to hide the SARs. So this is the market, right? The market is made up of candles, and candles tell you about price action. It lets you know if price was high, if price is low. It lets you know if price is buying, if buyers are buying, if sellers are selling, and what is currently going on in the market. Now, one thing that's going to be important for all of us to understand here before we get into those indicators is that the market will always be going up and down, right? I can scroll back literally 20 years on this chart, and you're always going to notice that the market is making this M or W pattern, right? And I'm just going to scroll back a little bit just so you guys can see exactly what I mean by that, right? No matter where you go on the chart, you're always going to notice that up, down, up, down, up, down, up, down, up, down. But then you're also going to see a lot of white space as well. But when you're trading, you're really only going to want to focus on the candles, right? And not really so much the white space, unless we're talking about market gaps, which we're not. So let's just stay here, right? So when you see that the candles reach a point, right, and only above that point you see white space, that's going to be called your area of resistance, right? So I really hope you guys are taking notes, because you need to understand this basic vocabulary so that you can understand as we move throughout the session, because it's not going to be a long video at all. But again, I'm teaching as I go for people who may have never seen a Forex video before, or if this is your first time. So there are all these free tools that you can use over here, but for the most part, we're only going to be using a trend line tool. You click there and you click horizontal line. Now, all of these tools are there for the purpose of them is to help you take notes on what you're seeing so that you don't have to make mental notes and so that you don't forget. So for this example, I'm going to put a horizontal line there, and I'm going to put a horizontal line there. And the reason why I'm doing this, I'm sorry, guys. Click something. And the reason why I'm doing this is because these are my areas of support and resistance. This is where I can see price was buying. It hit a cap, and then we see the white space, right? And then price decided to sell, right? So when you see that price was going up, and then you see these wicks or long lines on the candle starting to form, and you start to see more white space and less candles, that's your area of resistance, and that's where price tends to sell. And vice versa, price may go up and then it'll come down, right? We're going to circle this. Price will go up and then it will come down, right? And we're going to circle this. Price will go up and then it will come down, and we're going to circle this. Just how we saw at the top that there were these little lines and wicks and then the price reversed, the same thing happens at the bottom, where you don't see these wicks going down any further. You do see a bunch of white space, and then you see the market goes back up. This is called your area of support. So support is going to be where price was going down, and then it's no longer going down, as we can see demonstrated by here. And then the top, where you see price was going up and is no longer going up, is going to be called your area of resistance, right? And again, resistance is where price will sell. Support is where price will buy. You'll also notice that the market is buying when you see a series of green candles, right? So in this example here, we can see price was at a support, right? Not only was price at a support, but the candles, right, or the capture of price action was green. So price was going up, right? Then we see price hit that resistance. And what happened when it hit the resistance? The candle also turned red, right? There was more resistance, right? Until we came back to the support, right? And then we see the candles turn green again. So that's something else you want to write down. Green represents prices going up. Red represents price is going down, right? When price can go up no higher for the moment, that's called an area of resistance. When price can go down no lower, that's called an area of support. Now, when you're talking about trading, this is the fundamental thing that you need to understand before getting into the market. Where has price been selling, right? Where has price been selling in the past? Where has price been buying in the past, right? Where has price been buying in the past? And these are essentially going to be your entry points and how you get into the trades and how you get out of the trades, right? And this is just simple price action. What is price doing? Is it going up? Is it going down? Is the candle green? Is the candle red? Now, this alone tells you enough about the price, but you can always do a little bit more research, right? You can always dive a little bit deeper because, yes, trading is risky. But if you have proper risk management, which means you're properly managing your risk and you're doing everything you can to assure that the trade goes in your favor versus not, then you are on the right track, right? You're on the right track. So hopefully you guys are following me so far. If you are watching this in the future and this is making sense to you, right? The chat should be on for live playback. Just type in the chat, this makes sense, right? Because understanding these simple concepts can be the difference between you making a little bit of money this year trading, right? Or you making a lot of money this year trading, right? Understanding these fundamentals can be the difference between you making a lot of money trading and then you being a pro trader and making this your full-time income. So please take notes and please pay attention. So again, now we want to dive a little bit deeper into what the price is telling us so that we can assure if we should be entering this market for a buy or if we should be entering in this market for a sell, because you can actually make money when the market goes both ways. It's just up to you to determine, what am I looking at, right? What are these indicators telling me about price, right? Is this a good place to get in? How strong is this trend, right? And we're going to work out all of those things in this video using this short little snippet of the market, right? Because I'm going to go back into the past to show you other examples, but let's just focus on this, right? The candles that we can see right now, right? So the first indicator that we're going to go over is called the Parabolic SAR, right? It's just notated on your chart as SAR. But if you were to go search it in your indicators, you would just type in SAR. You will see that it will come up. You would click it. It will pop up on your chart, right? Mine's is purple. You can change the color by clicking on it, clicking style. If you need it to be a little bit bigger, because it'll start out small like this, you can have it as thick as this, or you can have it as thin as this. I keep most of my things on 2, and it's simply just so the second thickness, just so I can see them on the chart. So I turned that purple. Now, I love the Parabolic SAR. It's such an easy indicator that tells you a lot about the price, but it doesn't tell you everything about the price, right? Now, the Parabolic SAR, you can write this down. It stands for stop and reverse, right? And it's an indicator that tells you about the trend of the market. So you'll notice, and I'll scroll back so that you guys can see some examples. You'll notice that when the candles are above the SAR, right, the market tends to be going up. And you'll notice that when the candles are below the SAR, the market tends to be going down. And that's extremely important, right? So I'm just going to scroll back, right? And if you're watching this in the future and you can see it, just drop in the chat. I see it. I see it. I see it, right? And I'll even draw it out for you guys just to make it make sense. So we see we have the SAR at the bottom of the candles, and then we can clearly see, based on the shape of the market, right, and the colors of the candles, that price actually went up. And for the duration that the SARs are under the candles, meaning price is above trend, right, we can see that the market was going up. And then vice versa. We see that, let's just look right here. We see that when the candles are below the SARs, right, price is below average. And then we not only see that they're below the SARs, we also see red candles, right, pushing down, letting us know that that's an indication for a sell. Now, it's that simple, but I'm gonna give you some more tips and tricks about the SAR. So another thing you'll notice is that the further away from the SAR that the candle is, the stronger the trend is going to be. So for example, we can see that the trend was just starting here. We see a resistance, right? Let's remember our vocabulary. We see a resistance because we see the candles pushing down, and then we see all the white space down here. Then we see that the SAR is at the bottom, and then it's not that close to this candle. But then on the very next candle, look how far away the SAR is from the candle, right? So that's a tip, guys. The further the SAR is away, the stronger the trend. But the most important thing to keep in mind is that if the candles are above the SAR, candles are above the trend, and it may continue to go up. If the candles are below the SAR, that means price is below where it typically is trending low, and it has a propensity to sell. Now, another thing I love about the SAR is not only can you use it as your entry signal to get into a trade, but you can also use it as an exit signal to get out the trade. Because you'll also notice that whenever the SAR flips, that's letting you know that the trend has the potential to change. And I'm just going to give you a quick example of that right here. So we see, let's look right here. We see these SARs here. We see the market was selling, right? It was going down. So that's corresponding, letting us know that what we're seeing is true. The SAR is going down. The SAR said the trend is down. Candle say it's going down. It's going down, right? And then what do we see? We see the SAR flips from the top to the bottom. And when the SAR flips and when the SAR changes, so does the trend. And that's going to be extremely, extremely, extremely important to understand as we build on these other indicators and build on our strategy, right? Because your SARs are actually going to be where you're going to set your take profit, right? Your SARs are going to be where you're going to set your stop loss. Well, mainly your stop loss, but you could use it for a TP as well, right? It just gives you so much information, and it's just so simple to use, and it's only one thing, right? A SAR is like one of the best signals for me that I use to know when it's time to get into the trade and when it's time to get out of the trade. For example, if we would have stayed in this trade for this entire duration because it continued to go up, 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 and then we decided that we wanted to stay in this trade until the SAR flipped, which was around here, then we could have done that, right? And we could have basically made profit on this entire move going up. So for every candles here, every candle we see, we would have made money simply by going off the SAR. But sometimes the SAR is not enough, right? Sometimes the SAR is not enough because you may get a false signal and you have something called divergence. So you may see where, let's look right here. This is the perfect example. This is why the SAR is not enough. You may see, for example, you have the SAR is under, right? As if the price should be going up, but then you have a red candle, right? And if you would have gotten for a buy off of this candle, you would have essentially lost some money because you're like, oh, the SAR is under. I got in for a buy. But we're going to add another indicator, right? Just one more indicator that's going to clear all of that up for us. And this indicator is called the EMA, right? Because while the SAR is great for pointing out short-term trends to us, the EMA is going to give us more information about the long-term trend, right? And this is called confluence, when what's happening on a higher time frame and over a longer period of time is also happening on a shorter or smaller time frame as well. Now, you won't always find top-down confluence from your higher time frames to your lower time frames, but when you can find that, it's amazing. Now, I'm going to tell you how to use the EMA, but then I'm going to tell you how to use the EMA and the SAR together to ensure that you are making more money than you're losing when you're trading. So for this indicator, you're going to want to search EMA, and then moving average exponential is going to come up because that's what EMA stands for. It's an exponential moving average, telling you where price was over a longer period of time. Now, with this particular indicator, you're going to want to put it on your 200 EMA. So you're going to click settings. You're going to click on your EMA. And then when it comes to inputs, you're going to change your length to 200, right? And this just means for the last 200 sessions or candles, was price above or was price below average? And you'll notice the EMA by this skinny blue line. And again, you can make it thicker. Let me just make it a little bit thicker. Make it a 2 so we can see that thing, right? Now, this is so easy to use as well, but it works even better when you put it together with other indicators, right? Because one indicator will tell you one thing about the price, like the SAR is an indicator, the EMA is an indicator. But once you have two or more indicators and you put them together, this is called a strategy, right? And we can call the strategy whatever you want to call it, but for today, we're just going to call it the SAR EMA strategy, okay? So this is how it works. Again, the EMA is telling you about what has happened over the price of the last 200 candles. Simply put, and you guys write this down, if the candles are above, right, you're gonna notice that's a trend. If the candles are above the EMA, you're gonna want to look for and focus on buy opportunities, right? And look, we have a perfect example here. Candles are above the EMA and above the SAR, and then we have this huge buying trend right here. Huge trend, guys, right? So if candles are above the EMA, you're going to want to look for buy opportunities. Now, it's not to say that candles will not sell because we can see it clearly did, but you want to manage your risk, right? You want to maximize your profits. And this is an easy way how, right? Because although the foreign exchange market is open 24 hours a day, right? 5 days a week, that doesn't mean that you should be taking every trade. You want to wait for your entry signals. You want to wait for the best opportunities. You don't want to jump in every time you think you see something, or you don't want to miscounter your confirmations or trade against the trend, because take it from me, folks, you will lose money. Okay? You will. So now you'll see that when the candles are below the EMA, again, you're going to want to take sells. And when candles are above the EMAs, you are going to want to take buys, right? It's not saying that you can't take buys when they're under the EMA, but you will have a higher probability of making money if you trade with the trend. For example, we can see here, we have three things. We have the red candle, right? We have it under the SAR, right? We have it far away from the SAR, and we have it under the EMA. Guys, that would be a surefire way to let you know that you would want to get into this trade. And if you would have gotten into this trade, you could have stayed in for this one candle, and you still would have made 50 pips, which is not bad at all. You could have stayed in for this entire trend. You actually could have stayed in until the SAR flip, which we can see is about right here. And you would have been in this trade for 5 days, but you would have gotten 256 pips, which is not bad. If you're using even the smallest lot size of 10 cents, you would have made $25.62 off of a 10-cent risk just by understanding how easy it is to use the EMA and to use the SAR. So again, when candles are above the EMA and above the SAR, you want to take a buy. When candles are below the EMA and below the SARs, you will want to take a sell, right? Now, you can use this strategy on any time frame. Right now, I'm looking at it on a 4-hour, but let's just go down to a smaller time frame to see if we can get a better example, right? Well, we don't even need a better example because we can see it right here. We can see that, let's just say we were in the market during this time when this was happening, right? Sorry, y'all. Let's say we were in the market when this happened. We would have not wanted to take a trade for this entire duration, right? We would have not wanted to get into any of these trades. We would have wanted to wait until the SAR flipped, and then we would have gotten in on this candle, right? And that would have been enough. That would have been fine, right? That would have been fine because you don't need a million pips. Here's another example, y'all. If we would have been in the market at this time, and then we would have saw, okay, yes. Wait, let me delete this line. It's confusing me. Right. So if we were in the market during this time, we would have saw that, yes, the candles are above the EMA, right? But then we would have saw that it was selling. So we would have said, huh? You don't have to trade if it's not aligning with what you want. We would have waited. Look, guys, what happened if we would have waited for the SAR to flip plus the candle being above the EMA? We would have been able to be profitable off of all of this price action right here, right? We would have caught all of that price action because we have the candles above the EMA, we have a green candle, and this is like a really important thing to tell you when to get in the trade, right? The SAR flip. And then let's just see, and this is a smaller time frame, so let's just see how many pips we would have been able to potentially make if we would have gotten in for this entire move, right? 195 to 100 pips, right? That's not bad at all. Even if you were only using the smallest risk, 10 cents, you still would have made a good $10, right? Just by understanding a simple strategy. And if you're using a higher, like a standard, right? A standard is $10 per pip. You could have made $960 to $1,000 by the same exact move. That's somebody who made $10 from, right? And I really just want you guys to start getting in your mind that it's not always about the pips. I mean, it's not always about the money that you're making. Because when you're first starting off trading and you're having your small account, you may not be seeing all those profits that you want to see, right? You may be making $3 here, but that's still 30 pips, right? Now imagine when you are able to use a standard and you're getting 30 pips. That's a lot. You're going to be making $300 off of the same exact information, off of the same exact move, off of the same exact information that you made $3 off of, right? You can make $3,000, right? You can make $3 million, right? And that's why it's important to learn this skill. And I do have another video, right? If you guys are like, what is pips? What is this? What is that? I do have another video that I released recently called Intro to Pips, Take Profit and Stop Loss. And it explains how people actually calculate the money that they're going to make in the foreign exchange market, how people are calculating their risk, right? Now let's just look at a sell example. This market has been on the up and up for a while, but we can also, again, look at a sell example. We can see that we would have had, let's wait for the SAR flip. All right, perfect. Look, we have the SAR flip here. The SAR flip happens here, right? So you could have gotten in on this candle, or you could have waited, right? The SAR would still be at the top. You could have waited for the candles to start to become under the EMA plus the SAR flip plus the red candle. And again, I believe this is the same move from before, or maybe not. Again, a good 100 pips, right, in 7 hours. So that means you could have put this trade in, went to sleep, woke up in the morning, richer than you were last night, right? Because it's not about how much money you made. It's about how you made the money, guys. And if you're making money from something that you learned in kindergarten, right? From simple shapes, simple colors, simple lines, right? If you're watching this video, it means you have Wi-Fi, right? You either have a phone or you have a computer. You have all of the things that you need to start trading in this market right now, right? TradingView is a free website, right? You cannot trade directly on TradingView, but there are apps that you can use, right? And you can really turn this into something else. My goal is for everybody to have a profitable 2023, 2024, 2025, and just for the rest of your life to just be better just because you learned something and you took it to the next level, right? Now, this is not everything you need to know about trading, but it is enough to get started, guys. I have a lot of videos that if you just watch them, right, take notes, revisit them. Like, how many times have you watched your favorite movie? How many times have you listened to your favorite song, right? How many times have you worn the same things, right? Sometimes you have to repeat things, right, in order to really appreciate them or to understand them. I know when a song comes out that I really, really like, I'm listening to that song a million times until I learn the lyrics and the ad libs, right? So you have to take your trading education the same way. This is a new language, right? This is something new that you're being exposed to. But if this information is getting you excited, right? If you're like, wow, it seems simple enough, because it is simple enough, right? It's not going to be a scotch-free journey. Like, I will be the first person to tell you that you will take losses, right? You will take losses. Nobody has 100% win rates, but it is the skill that pays. And if you let it, it will change your life, right? So I just really wanted to come on here and show you guys a simple strategy that you can use to start to become profitable. If you still feel lost after watching this video, I highly recommend that you watch my Forex Trading for Beginners playlist. I recommend that you start with the in-depth intro to Forex trading. And then I recommend that you watch my intro to Pips, Take Profit, and Stop Loss video. I recommend that you watch my technical analysis video, right? And just all of the videos in that playlist, because you will get caught up and it will make sense, right? You can do this. You can, if I can do this, you can do this, right? If I can do this, you can do this, right? I say that wholeheartedly. So I really hope you guys learned something in this video today. I really hope that you guys come back for more information, because I will continue to drop videos, right? Drake said, moment I stop having fun with it, that's when I'm done with it. Like, that's going to be the same thing in this case right here, right? So if you guys enjoyed this video, you feel like you learned something today, you like the vibe and you want more, make sure that you are subscribed to the channel. Make sure that you like this video. Make sure that you leave a comment. Tell me what you learned. And make sure that you share so somebody else can get this information and we can just all go up together, y'all, because we rich friends, right? It's up and it's stuck. So that's really all I have for you guys tonight. And I'll see you all next time on The Money Mantra. Bye.